Today I tested a new strategy on the live account and I had 2 losses and 1 win. Well, one of those losses looks like it came from my broker rather than the markets, but let's just look into the whole situation. However, I recorded it in my journal, which I'm going to show to you guys on today's video. Without further ado, let's head right into it. And if you're in for realistic trading, do well to hit the subscribe button, like and follow. Now, the strategy I traded today was called it's basically a mean reversion strategy. What do I mean by a mean reversion strategy? So it simply means that when price moves to a certain degree, it is most likely going to snap back. Let me use a rubber band for example. If price moves in a certain direction too much, there's a high tendency it's going to come back. Maybe not to the original state, but at least come back a little bit. That is what mean reversion strategy is all about. With all of this in mind, how do you then trade mean reversion strategy? It's all about monitoring when price runs too fast in one direction and then trading opposite of that move. That is what mean reversion is about. Now, you're not trading opposite and hoping that it like capitalizes completely on the first initial run it did. No, you're trading opposite of it, hoping that it comes back to a certain degree. That certain degree is your take profit. Now, this strategy is mostly done with something called the Bollinger Band. Let's get a Bollinger Band right here in this case. So, just putting on an ordinary Bollinger Band on the chart. This is what it does. So, the Bollinger Band is a mean reversion tool. You use to calculate, okay, how far has price gone from its current mean, from its current average. If it's moving far away from its current average too fast, it is most likely going to return at some point, which is what you see right here, somewhere around here. Allow me redesign that tool to make more sense. So, which is what you see right here in this range right here. So, what did you see basically? We saw price pull downwards and then come back towards the mean, which is what mean reversion is. Now, like I said, it would not return all the way back to this level. It is not mostly going to do so, though sometimes it does, which as you can see here, this is the level. You see where price comes back to this, but you're not looking for it to come back to that same level. You're simply looking for it to revert a little bit. Basically, you are trading the most avoided thing in the market, which is you're trading corrections. And trend traders will tell you avoid trading corrections. Whereas consolidatory traders or traders who trade the consolidatory zones or consolidation or range market, they will tell you corrections is what they trade. Now, everybody trades whatever they like. It's their strategy. It's their way of trading based on the way of thinking. But what does this do? Now, I trade this on the 15 minutes, meaning it's a day trading strategy. You don't need to look at the higher time frames or any other time frame. You just need to watch what price is doing on the particular time frame you are, watching how price runs away from a particular zone and hoping it will come back towards the main direction for a correction. Now, this is exactly what I did in my trade today. This is 2 of my trade. I have a 3rd trade somewhere else. Speaking of the journal I was talking about, it's an online journal that as soon as the trade closes, it automatically registers. And this is the trading journal. It's called Trader Waves. You would see the link in my description below. I'll also share my referral link, somewhere on the screen. Now, what does this even do for me? Like basically, what does it do for me? It just picks up my trade by itself. You can see it last synced 12 seconds ago, which is like just because I selected a new page. However, let's see what it really looks like. So I can look at different dashboards as well as look at journal the trade. Now, this is today's trade. As you can see, I said 3 trades, 2 wins, 1 loss. And today is currently ending at a very, very small positive. I can look at my calendar and decide, okay, what's really happening today? Now, like I said, I started the strategy today, 2 days ago, 3 days ago. I was just testing a lot of nonsense on a live account. Trust me, you can see it right here. It clearly says Vantage Real. Okay, so real account is on Vantage broker. Now, I'm not using this to promote the broker. I'm just saying this. Now, what were my trades? Price moved away from the necessary points, and at the point I saw it pulling back, I followed a pullback all the way to this point. For the first trade, it hit take profit, and that trade got me a total profit of right here. Where is it? Let's open today's trade. That trade got me a profit of $3.21. Now, it's a very small amount of money. The account balance is actually $50. Yes, I'm not one of your rich forex gurus that throws money and shows you flashy cars. I'm just here trading the reality with as little money as possible as I can spare. Now, $3.21. Now, this is the New Zealand US dollar. It was not mean reversion. This strategy was quite different. I was trading something else here, but however, we went in a loss. And finally, we have the other trade on the British pound US dollar, which I then lost $2.28 on. And why did I now say this second trade most likely was from my broker? Let's zoom in on the chart. The first trade started here. What was the strategy again? Price moves in a certain direction too fast. It's most likely going to pull back. So price has gotten to the band and is now showing me signs of pullback by crossing above the last bearish high. That is the last bearish candle's high. As soon as I saw that break above, I said, okay, there's a tendency we have something here. Yes, you might say, why did I not enter here? I'll say a little bit of intuition. Why? Because I've been watching this strategy since on Monday. I didn't take a trade on it. All those trades I have there were from different other strategies. I didn't take a single trade on it. I watched it every day on the British pound US dollar since that was, I think, second of this month. I've been watching it, and I've been watching how most times when I get some kind of doji, it doesn't really move well. But when it's like gives me a clear move, like a clear break below, or above, it actually moves. So you can see one, sometimes you get faked out, okay, which is real. You can see one right here. We have a movement above, but it didn't break properly above, as you can see right here. It didn't break above well. Same thing with this point over here. As you can see, it wasn't closing above. It's just going above a little bit. Compared to this, you can see the close of the next candle is scary. But when I see something like this, which, as you can see right here, it's clearly closing above. I said, okay, fine. Now let's take a move. You can see how it takes you back to the other edge of the Bollinger Band. That is what the strategy is all about. However, it's not just the normal Bollinger Band. I use something called it's called an extreme fade. I added a third layer to it, a third layer of Bollinger Band. That is an outer deviation, 3 standard deviation. And I watch from that deviation. What do? I need price to close inside the band or beyond the band. So if price closes below this band or inside the band, it has to close inside. It's not just about price close went fast. No, nah. Price has to move and close inside the band. From this close right here, I'm going to show you what I mean. From this close right here, this close right here, I will start monitoring the market. That is it. The moment I see this close right here, I'm starting to monitor the market. I want to see price come back and close above any of the lows it starts to print. Any of the lows it starts to print. That is what I want to see price do. And you can see that happening, coming down, nothing, comes down all this way. Even this one was not valid. Sorry, I keep switching the chart. I don't know why. And then we finally get to this one. See, this one wasn't proper close, but you see this was a close. At this point, I'm supposed to take a buy on this trade, and I hit the buy button as soon as I see it close. You hit the buy button, stop loss below this level. Now, the bad thing about this strategy is you can aim for 1 to 2. However, you have to have 2 targets. You have to have a target 1 to 1 and a target 1 to 2. That is problem number 1. Problem number 2 is you may not mostly get your 1 to 2, because as soon as price finally gets to the upper band, which is here, you should leave the trade. That is if you want to use a stop loss. Now, if you do not want to use a stop loss, you're free to run this trade without a stop loss and chase this trade until it closes back inside the range, inside the upper range. Now, this is the riskiest, or rather the riskier way of taking this trade. It is absolutely risky. You can have like very crazy drawdowns and even terrible losses. So, like I said, there are two ways it can happen, right? There's the strategy of, you can have stop loss below. So ST below low or above high, That is one strategy. And what is the take profit? The take profit is going to be, the TP is going to be 1:1, that is target 1, 1:2, that is target 2. But before all of this, opposite band, that is all of this. The same strategy has a second way of trading it, which is no STs, that is no stop loss, and then only take profits, rather end the trade, or end trade when prices closes in any of the band. What does this all entail? So in a situation where, for example, let's say you took an entry here accidentally. Let's say you took an entry here accidentally, a buy entry here. You only close this trade if price closes inside this band again, which is right here, right? That is if you accidentally took a trade here. There's no way you're supposed to even take a trade in the first place. But that is how it works. Now, if you saw for a profitable stance, then what it means is you're going to enter a trade. You won't set a stop loss. You will just keep waiting for price to close either in the upper band or the lower band. And you can see right here, it closed in the upper band with this amount of profits, though you won't get like an actual amount because there was no amounted risk. There was no amount risk. But let's say whatever the price is, you end up with probably $14. Let's take a good look at it here. I'll just take this to 100, was $100, and you risked 1%. Let's say 1% of your account was what you placed down on the entry. So you end up with $205, basically a lot. You see, all the way from $100 to $205. So you would have made 100% of your account balance from just this one trade. But however, you can also still lose, don't forget, you can also still lose almost 100% of your account balance. Okay, sorry, you could win 102 and lose $99 of your account. So lose $1 in your account, sorry. Now, that's what this whole thing is all about, strategy. Let's head into the actual trade itself. Spend a long time talking about the strategy. Let's head into the trade itself. The trade, now you see the first trade I took right here. It was simple. Price came into this range as of this was around 4 in the morning, and then I came back into this market and watched this market move. I kept waiting for clear close. Now you see this was a clear close right here. Why didn't I take it? Well, I wanted the close to move well. I wanted it to not just close but give me like reasonable candle movement. Secondly, the time when it appeared, it was 5:44 this morning. This is Lagos time, and London session is just around the corner. I won't take this trade. It is freaking risky. So what do? I waited. At 7 o'clock, this was literally end of Asian session. I told myself there's no other move. Once you see a take, it's worth taking. If you don't see a take, then you know you saved your ass. As soon as I saw a take, I dived in a trade. Aimed for the first high of 1.6. That's basically, I was aiming for 1.5 actually. And luckily for me, about how many minutes later? That's roughly 1 hour later. So 4:15, about 1 hour later, I ended up in profit, and you can see it right here on my journal. Let's head back to that one. You can see 6:39 all the way to 7:41. So 1 hour, 2 minutes. I was up $3 in my account. Now, mind you, I risked, I think, roughly $1.20 when I took this trade. It was a very, very tiny risk. You can see it right here. This is the journal. This is the image right here. So you see, entered right here, let it roll up as much as possible and let it sit in profit. Then I had the final trade, the British pound US dollar trade right here on the chart. You can see it. I entered here. I'm going to zoom in. It was a 1 hour. It's 15 minutes. Yes. I entered right here. But you can see where I get stopped out. It's not actually at the top. I got stopped out at the price level. Where is it? You see the price level right here. 1.33719. But like I said, that wasn't my actual stop loss. You can see this is 33719. But my stop loss was right above this high. Not here. It was here. I will take it. It was spread, which I completely doubt. But let's just let that one slide. So let's see. Should I even be in a trade? I think I should be in a trade right now, right? We should be in a trade right now. What is the trade about? Look at the strategy again. I see number one, these are the conditions. I see price closing inside my band right here. This is my close inside the band. That is the one. And I like to have this above. Yeah, so that you can put the band. See, I had this first close here. I won't call this a clear close, but this one was a clear close inside my band. And then now I see price not just closing inside the band, but also now coming out of it with clear moves. So I'm supposed to take a buy when price closed here. Now this is, you will say this is close to it, but this is a 15-minute chart. This is a 15-minute chart. I could either just take a standard buy by hitting the buy button. You can see I'm logging into my account. I could either take a standard buy, right? A 0.01 loss. Like I said, it's a $50 account. You can see I'm down $47. But I can either take a straight buy with no blocks to profits and losses. But in my opinion, it's evening and I would like to always protect my ass. So I'm protecting my ass by putting this. And it's always, mind you, it's a very, very tight stop compared to every other strategy. It is a very, very tight stop. And what am I going to do next? Simple. I draw up my line, put this here, and I'm aiming for what? 1:1. This is 1:1. Let's see, 1:1. That's about $39. Yep. Oh, I didn't put this right. This is where it's supposed to be. Yeah. So that's a 1:1. But if I wanted a 1:2, I could as well do this. This is 1:2. But what's the chance that this is going to happen compared to this? It's actually very, very small. So I'm just going to leave this as a 1:1. And if I come back and see it in profit, I'll take it. If I come back and I don't see it in profit, well, it's fine. It's fine. Either way, be careful out there. This is what trading is all about. See you guys in the next video. Peace.